Little trade recap for the Wednesday the 19th session for you guys. Decent trade for the day. Just picked up this new little G-Shock Casio. Lovely little watch picked up at the airport. Thought I'd give myself a little treat being on the holidays and such. So let's dive into the trade. I'm on the replay. We've got this 1 hour bearish fair gap respected. It's been respected in the pre-market. We can see we've come up, chopped a little bit above it on the 1 minute, but on the hourly we're respecting it, and we've displaced down. We've opened up this 15-minute bearish favela gap, and then we've got a 5 or 15-minute high here. I'm just going to hop on to the hourly and mark out this sell side liquidity level. What else was I targeting? This sell side liquidity level, and then as a final there was this sell side liquidity level that I had marked out as well. So we jump back to the 1 minute. Yeah, we can see we've got those down there and that there. So we'll just run through it a bit. We're getting close to market open. We get market open. We've retraced into the 15-minute, and then we've inversed the 1 minute bullish candle that we open. But boom, we sweep out internal liquidity and absolutely displace up. So at this point I'm thinking, okay, we could be going bullish, but we don't. What we actually do is we sweep this little internal high, and we actually soup it with SMT, with ES being nowhere near this and kind of consolidating down here. So we've got a 5 minute sweep of liquidity. We've respected this 5 minute bearish favela gap as well on the retrace. Obviously the wicks do damage, but the 5 minute bodies have respected it, and then yeah, we open up this little 1 minute here. We've also inversed all of these, so we've not got a change in the state of delivery after taking this soup and SMT, but we can see we've got 1 and 2 bullish fair value gaps that we've opened up, but we've inversed them in one candle. So to me, I'm like, okay, bearish as hell, SMT soup, high time frame bearish with the hourly, high time frame bearish on the 15-minute, bearish on the 5 minute even, and we've got an SMT with soup. We open up this little 1 minute and we retrace into it, get out of it, and then this is the moment where I slap a short. I leave my stop at the high, and then I am targeting all the way down here as the hourly liquidity pool. Now I took this on 2 accounts, my 50k account and my 250k account. Now for my 50k account, I just left my 2 contracts all the way here or all the way down to here, so I was fairly confident that these 2 were going to get taken. But on my 250k account, obviously I've got way more contracts because I just used the micro because it's already charted up here. I had like 10 contracts or something. So my first take profit was here. I left some contracts on for the sell side levels here, and then I had some runners going down to the standard deviation level. So we can see kind of price starts chopping, but we eventually go and hit my first take profit for my 250k account, so I take that off at something like a $600 win on there, and then that is a nice 1.83 risk to reward. Once we've come down, I believe I managed my stop loss, tightened it somewhat like that, I believe. And then I was a little bit nervous on this retracement up, I won't lie. We started consolidating, and then this is when I'm stopped out in profit, I believe. Where was I stopped out in profit? Even earlier here. So I saw that we started consolidating here. Obviously this is like 15 minutes of consolidation. We've not continued bearish, even though we've retraced up slightly. So I moved my stop just kind of to the top of this bearish fair value gap. And then we come up, we sweep out me, and we stopped in profit on my 50k account, stopped in profit on my 250k account, but obviously I've taken a small win on there as well. I didn't scale on my 50k account because I'm only trading with 2 contracts, so I didn't want to scale just there, although that probably would have been good risk to reward, to be fair, if I'd have just done that. No real reason I couldn't, but I was fairly confident in this draw on liquidity. We got so close to it. But managed my stop nicely, got stopped out in profit, and we can actually see that for the rest of the day we just keep pumping to the upside after hitting that standard deviation level. There's no possible way that if I'd have left a stop anywhere I'd have been alright. So pretty easy, pretty simple trade, but using fair value gaps is your best friend, and the SMT with the soup, the standard deviation kind of matching my liquidity levels, not as precise as I'd normally like anyway. Sometimes you can get really lucky and it'll be perfectly like that, but I didn't. But it provided a really nice low hanging fruit, and I managed the stop loss into profit really quite nicely. I managed it here after we got some legs down, then I managed it kind of something like this, and then managing it in profit as well, once I recognized the kind of bad market conditions. We had a FOMC later in the day, FOMC minutes, not actual FOMC meeting, but price just normally consolidates, and if we go on to NQ, actually we can see that we didn't even have any of a bearish move at all during this time that I took the trade. We literally just sat within this range, so I got really lucky with the S&T and NQ being obviously the higher volatility of the two. Managed to take a decent scalp. Great trade, good direction bias for the day. What could I have done better? Should have just risked up slightly maybe on my 50k account, taken some, this is a great low-hanging fruit. Low-hanging fruit's always good. I could have taken 3 contracts instead of 2, taken at least 1 or 2 off here, and then I'd been nicely green for the day on both accounts. But that's why I've got the 250 and the 50k, more scaling opportunities for contracts. We're trading with 10 rather than 2, so great trade.